Today is Monday, May the 17th, and I don't want to do a video every day. I did one yesterday after about a month, just to get caught up with people and to show them that the technical indicators are still working. And then today I thought was rather extraordinary, and there were some key indicators that continue to be in play today. And I want to also take a look at AT&T, which, as you know, is a stock that I really like for its dividend, and explain what happened today and what I see going forward with AT&T. First of all, the McClellan oscillator right at the neutral point, after having come back from really oversold, basically didn't move, and that's because on the FinViz side, the advancers and decliners were pretty even. The nice thing is that the market did drift up towards the end of the day. In the afternoon, the market moved up. Pretty good sign. Most things were red. The financials were green. US Bank hit an all-time high. Amazon and Google were up. But Microsoft and Apple were down. So a lot of the techs you can see here in the red. But where's the silver lining? Let's look at the markets here. Here is the Dow Jones simply pulling back from an all-time high. NASDAQ certainly showing signs of weakness, now below the 50. Could be going as low as the 200 if tech continues to fall out of favor. The S&P certainly doesn't look like it's in any danger, does it? I mean, it bounced nicely off of the 50 for 2 days in a row. That's a really good sign. And the Chiku span I showed you yesterday had this nice bounce off the candle. What we want to look for now is another bounce off the candle in the next few days. So let's just put a little sign here, and when that happens, I'm certainly going to come back with more video. The volatility index, however, is still in the complacent range, which still indicates that there's no fear and the market should still be going up. This is just one of those pullbacks that we see that happen from time to time. The markets never go up all the time. They have to pull back. They have to be in a position, for people to buy the dip, feel that they've got a deal. Let's skip right now to NIO. What's good about NIO? Bounced off the 50% on Thursday and had a little bit of a turn up today. So it didn't start off very well for NIO, but on a 5-minute basis, it turned up towards the end of the day. Good sign. Square is interesting. Square has now spent 3 days on the 200. It lost the 200 Thursday, it lost it Friday, and it lost it again today, but it's maintained the 200, which is also at a 61.8% Fibonacci. So that should give you lots of pause for confidence, because there are two things that buyers see technically to support Square. It's also oversold on the fast-moving oscillator, a stochastic momentum indicator, and on the long term, it's coming down to the oversold line. So maybe the worst of Square is behind us. Here's AT&T, I think the last stock I'm going to show today. Look at this huge reversal. Now, the first thing you see is that it hit the 61.8% Fibonacci of this big move down. And this move down, you could call it the Time Warner move. This is when AT&T bought Time Warner, and the market lost confidence in it. This was a bad deal. So if they got rid of Time Warner today for $45 billion, remember they paid $85 billion for it, but the main thing is that the amount of money that would have to be spent to invest in Time Warner to compete with Netflix and CBS, Paramount, and Disney would have been substantial. So this move merge with Discovery removes the obligation from AT&T shareholders to have to spend a lot of money trying to compete with Netflix. That's now a problem on this new company that's going to spin off, and AT&T shareholders are going to own 76% of that company, and they're going to get those shares, presumably, what they're talking about, in some sort of a mass dividend when that occurs sometime in 2022 after it goes through all the regulations. But this is what we call the opposite of an NR narrow range type of candle. This is a expanded range, and I really can't find a candle indicator, but this engulfs 11 previous days worth of candles. Typically, these narrow range indicators will indicate a move to the upside. This should call for a reversal now and a move to the downside, but I think it's only temporary, and I wouldn't sweat it. If I had some money, if I had more dividend dollars, I'd buy more AT&T. Where is it going to get its continued support? If it comes down to the 38.2, which is also the 50 moving average, and it's also the top of this gap. All those three things are happening at the same time. So don't be surprised to see AT&T pull a technical coincidence coming down to the top of the gap, the 50 EMA, and the 38.2% Fibonacci. And that would be a very bullish sign if it bounced off of that. Now remember, back here in April, AT&T, for one thing, has had a great year. So this 50 crossing the 200 is bullish. The 50 is still going parabolic, and the 200 is starting to move up as well. This is bullish. Don't worry about this. This is the Kramer effect. What happened today at 61.8% Fibonacci, that was just too much of a gain on the open. I mean, I was up $5,000 at one point, that it wasn't an opportunity for somebody to say, let's take some profit. And then Jim Cramer comes in and says, this is going to affect the dividend. I haven't read anything online that says the dividend is in any jeopardy. I don't know if the new company is going to pay a dividend, but the dividend will probably be lower, but it will be offset by getting a one-time dividend of shares in the new company. So I am still bullish on AT&T. If we take a look at its volume today, pretty high volume. That would indicate that there was some more selling than just mom and pop. And the SMIs are also showing that they were overbought. But in the long run, I will hold on to AT&T. I think it made a good move. It's going to be financially secure. And they said that their dividend payment would reflect more in the 40 to 50% of earnings. There is no figure right now for AT&T on what their dividend is for earnings, because last quarter they lost money. They intend to be profitable in 2022 and ready to pay 40 to 50% of their profits out in dividends.